Hey, good morning. You know what time it is? It's Coffee Chats with Candice. We're going to talk about sales tax today. So type tax in the chat or comments if you want the quick checklist. Today we're going to do a practical sales tax and compliance sprint so that you can do this in about 30 to 60 minutes and you don't accidentally have any surprise tax bills. I've had surprise tax bills, a lot of them, and I have dealt with them over the past, but sales tax in particular for Texas. So when you're late, it's due on the 20th of the month. And so I have to pay it by then. And if I don't file it and pay it by then, they charge me one, a late fee of $50, and then two, they charge penalties. So, and if you do that more than a couple of times, then they put a bond on you and require you to put up a bunch of money. So I had to do that too. It took a while, but finally got our bond back. And it was like in 2018 when it happened, and my mom and dad were both in the hospital like 2 weeks apart. My dad was in ICU. I missed the sales tax payment. That was the first one I missed all year. But because I had previous misses, they were like, nope, you're in trouble. Always try to really pay attention to that, especially if you're doing retail, you need to get that set up and get it on a schedule. All right, so why does it matter? Like I said, sales tax rules are local, so local to your state, local to your city, and they're messy. But small studios can get compliant super quickly with just a few steps. Collecting and remitting correctly protects your business from penalties and keeps bookkeeping clean for tax time, which is so important. So, step one, do you need to collect? I don't know. So quick rules to consider. You want to collect sales tax on tangible goods sold in your state. So retail products. So if you sell coffee cups, if you sell tanning lotion, if you sell aftercare products or prep care products, those things, if your state, there's 5 states that don't collect tax, but if your state collects a tax, then you have to charge tax on that. And I've talked about it before that what happens is you purchase your product tax-free from your supplier. And then when you get the product in, if it's for retail, then you're going to mark up the price and then you're going to charge tax on that total price. So the marked up price. Example, cost you $10, you mark it up to $20, you charge tax on $20, and that's what the customer pays. That tax is then sent into the state. It's just a pass-through. It's not part of your income or expenses. It's a pass-through. It just goes from them to you. And if you're not using that as a retail and it's something that you use in your daily business, then you have to pay a use tax. But we're not talking about that today. So I'm not going to get into that. Don't want to confuse you. So some states tax services as well. So you have to check your local rules, and cosmetology rules vary. So most states don't, but you have to check and make sure, because I do not know the rules to all the states. If you're doing remote sales or online orders, you could create what's called a nexus obligation in other states. So for example, if I am doing online sales and I'm selling a lot of product to Michigan, I'm just using it as an example. Once I hit a certain threshold, a certain amount, if the state says I need to pay tax on it, then I have to pay sales tax for Michigan, or I have to charge sales tax from anybody who's purchasing from Michigan. So basically, if you're banging at e-commerce, then you need to check it out. But I am not banging at e-commerce, so I don't have to do that. Step 2 is you want to register. So if you sell those taxable goods and services in the state where you have nexus, so that means a physical presence, if you have employees there, if you have economic thresholds, which are what I was just talking about, you have to register for a sales tax permit. So physical presence, I'm in Texas, I have to have a sales tax permit for my state. So that's my physical presence. I do have employees, or I did have employees, and I don't have economic thresholds that put me over, so that doesn't count. You have to have it also if you don't have employees. You want to register for your sales tax permit, and you want to use your state's Department of Revenue, or ours is the comptroller. So some are Department of Revenue, some are your state comptroller's office, or your accountant's guidance, which is always the most important thing to do. And small studios often only need one state permit. So like I was saying, more than likely, you're not creating a nexus, so you don't have to worry about that, but it's good to mention in case you're, like I said, you're banging at e-commerce. So you want to check the marketplace thresholds if you're selling online. Other than that, it's no big deal. All right, so step 3, mapping and collection. So you want to set your sales tax rules in your point of sale. Tag your retail products as taxable, services as non-taxable, as long as that's correct. And then create a promo with any SKUs that don't change the tax settings. So if you're doing a promo, you want to make sure that when you create that, it doesn't change your tax settings because you're not using your normal like retail, lotion 1, whatever. You want to test that out, a sale end to end, to confirm that the tax charge looks correct, because that is so important, because if you set it up and it's wrong, then that's not going to help you. And then bookkeeping and remitting. So you want to track your tax that's collected in a separate liability account. I want to go back for a second. And if you're not using a point of sale, reach out to me, because I created a sales tax spreadsheet whenever we first started a long time ago with our air conditioning business, and worked it that way. Not the best way. If you have a point of sale, that's the best way to go because it keeps it more accurate. But if you don't, reach out to me and let me know. So like I was saying, bookkeeping and tracking, track your collected tax in a separate liability account. Each payday or weekly move tax over to your dedicated savings account. So I have a tax account, and I don't do it every week. I do it typically on the 10th and the 25th. I'll move whatever percentage it is, we'll say 15%, from my income account to my tax account, and I know that goes there. You need to calculate what is best for you so that you always have that money available, because if you spend that money, then you're going to have to pay it, and you don't want to get to that point where you can't pay it. When you have a separate account like that, you may only use it just for that. So you get a savings account, a money market account, you transfer the money over, it makes a little bit of money while it's sitting there. And then when the tax comes due, you transfer the money back over to your operating expense account, and then you write out the check, or you do the online payment. However it is. You want to make sure to set reminders for monthly and quarterly filing deadlines. Step 5 is an audit your prep record retention. So you want to keep your sales receipts, your invoices. I'm just thinking, I put some text together. I'm going to switch over to that screen really quick. All right. You want to keep the sales receipts, invoices, daily Z reports, and that's your end of day cash report from your sales. Your exemption certificates for at least 3 to 7 years. So for example, I don't know that exemption certificates are going to be applicable in this situation. They're applicable in our air conditioning business because we purchase products. We purchase products at the retailer. We don't pay sales tax, and then we charge the customer. The exemption certificates, that is just having one for you. You won't need to get it from anybody else. I've had people say, "Oh, I'm sales tax exempt." Well, if you're selling lotion and stuff like that, you have to collect the sales tax. They're not exempt from that. So the sales tax exemption allows you to not pay. And if you're not charging tax to someone, you want that exemption certificate that you have from them that's on file so that you can prove that. Depending on if you're audited, you're going to want clear daily totals and deposit records. So quick action plan, 30-minute. Verify your point of sale, your tax mapping, and create a tax savings account. And 60-minute, register for any missing permits or start the permit application. If you need help with that, let me know. That's something that I can assist you with as well. 90 minutes, you can export 3 months of sales and reconcile the tax collected versus what's in the liability account. If you're just now starting, go ahead and do those 3 months. You can get the tax amount, and then you can put it over into the liability account. So if you want me to review your sales tax setup, your point of sale mapping, permits needed, and simple remittance plan, then book a clarity call with me and I'll walk you through it. It's not difficult. It can be confusing, but it's not difficult. So the link is in the description to book a call. And I just want to thank you for being here live or catching the replay. And I will see you here, same time, same place, for Coffee Chats with Candice. All right, bye.